Please welcome to the stage David Vélez, founder and CEO, Nubank, and Erik Schatzker, editorial director, Bloomberg New Economy.
Yeah, I told you you'd see more of me this morning. This is David Vélez. David, it's great to have you here.
Thank you, Erik, for the invite.
Your company, Nubank. Everybody knows Nubank in Brazil. But for those who aren't familiar with it, I need to tell you a little bit about this company. It's the largest fintech in Latin America with a market capitalization of $70 billion, bigger than the biggest traditional banks in this region, not far behind Mercado Libre, the e-commerce and payments giant, and also not far behind Petrobras, right, the traditional energy giant. Your stock has had a remarkable run. It's up 75% since the beginning of 2024, and it's up some 250% in the past 2 years. Will 2025 be the year that Nubank becomes the most valuable company in Latin America?
Well, if there's something you know about Brazil and Latin America is that you never know, right? There is so much volatility. We went public end of 21, and the timing was incredibly accurate because 2 weeks after 2022 came in, and stock went down 60, 70% with everybody else. And so it's hard to control. I think everything that we can control inside is our execution. We've been extremely focused since the beginning of the company in 2014. It's a very, very big market opportunity. This reinvention of financial services in Latin America. Brazil is one of the largest financial services markets in the world, and the business has been executing extremely well. So who knows what that means for price?
Well,
but
you're getting at my follow-up question, which is, what could change your company's trajectory?
So, I mean, I think that we've continued to grow about 70-80% a year in terms of revenue. So revenue growth is significant. We have, in our core market, Brazil, we already have close to 60% of the Brazilian population as a customer. So maybe 6 out of 10 are customers of us, and the other 4 we should talk after, see what's happening. But we only have about 14% market share in credit card, 7% market share in personal loans, 2% market share in investments and savings. So there's a huge amount of growth still within the 60% of customers that we have in Brazil. And a lot of our growth is going to continue gaining share every month across every single one of those verticals. We began Mexico about 4 or 5 years ago, and we're now about the 5th largest credit issuer in the market. And it's early days. Mexico has 12% credit card penetration. So I don't think we necessarily need a huge trajectory change. Is more about executing this plan where a lot of the market cap and a lot of the services of banked customers are moving away from incumbent banks into digital banks.
And I want to know more about that, because 60% of the Brazilian population means, I think it's what, 105 million clients here?
That's right.
It is an amazing number for such a young company, but to your point, you have a smaller percentage of the national wallet share. People with Nubank accounts do often a lot of the rest of their banking at the traditional banks, some of which are here, by the way. Itaú is here, Bradesco is here. How do you change that? How does Nubank capture more of the wallet share so that it's not just a purple credit card that you pull out of your wallet, to show people how cool you are, that it's actually where you get the lion's share of people's business?
Yeah, what's amazing is for over 60% of our customers that have been with us for over 12 months, we're already the primary bank account. So if you think we have 100 million customers in Brazil and we're the majority primary bank account for those, Nubank is already the largest primary bank account in the country, bigger than incumbent banks. That's something you haven't seen really in any market around the world, where fintechs are able to build wallets, but making that transition from wallets to primary bank account is extremely hard. We've been able to already accomplish that for the mass market. We haven't been able to accomplish that for the high income. That's a much harder challenge. It's a much more competitive segment. That's where incumbent banks do have branches, have private bankers, have a lot of service. We don't have that. I don't think we necessarily will get there, or we need to. So there is another sort of next level challenge of figuring how to do that in the app market. And that's the combination of more investment products. There is a lot that we need to do in the investments product to create already a very good investment proposition. We have to continue increasing the type of products that we have. We launched about 12 months ago what is called in Brazil Consignado, which is a payroll loan backed for government employees. That's the largest profit pool in the country, over 600 billion reais. It's effectively lending backed by the government. We just launched that, and a lot of Brazilian public employees are high income, so that's a way to get high income. Small businesses, we're already the largest, about 4 million small businesses. We're banking with them. So we're already one of the largest providers of services to small business, and a lot of those small businesses are high income. So anyway, it's a much more competitive space to be primary bank account in the high income. I think we're laying out the ground. It's going to be a multi-year challenge, but there are some differentiators to get us there.
You mentioned some of this just now. In addition to taking deposits, of course, Nubank offers loans, investments, insurance, credit cards. What am I missing?
We offer what we're creating called a marketplace, which is now going beyond financial services. Now you can buy e-commerce in our app. You can reserve a hotel room. You can buy an air ticket. And this is the beginning into launching more verticals outside financial services for the 100 million Brazilians that we have.
What other verticals make sense?
I mean, really, I think what we're trying to, the way we think about it is, if there's any consumer company or any consumer startup in Brazil that needs to acquire customers, we can help. Because we're bringing 100 million people to their front door, number one. Second, we know how to underwrite and provide credit to 100 million people. So if you know something about Brazil, if you can provide credit, you can increase sales. Mm-hmm. We'll go with Booking, or we can go with any type of provider and offering credit to sell more. And then we can integrate directly with them and save a lot of payment costs. So the sky's the limit, really, in terms of verticals. As long as customers need to consume any type of product across different industries, we can be a gateway into that vertical.
Two things you just said bring to mind a question. The portal that you just described a few minutes ago about bringing people together where they can, get hotel rooms and book flights and that kind of thing, and also the importance of being able to acquire customers. It's important, we're here in Brazil, there is some speculation in the local market that you're interested in buying a telecom operator. Is there any validity to that speculation?
No, we're not buying telecom operators, but the telecom space is an interesting space.
Oh, tell me more.
It is an interesting space because, when you look at what are the big verticals in consumer Brazil.
Telecom is certainly one of them, right?
It's financial services, telecom, healthcare, commerce, education. Those 5 sectors basically run the entire Brazilian economy. And so if you're a healthcare startup trying to acquire customers and paying $100 CAC to Google or Facebook, or you are a telecom company spending $100 to acquire a customer, or you are a education company, there is potentially an opportunity for us to help to be more of a platform that goes beyond just banking products.
Synergy. Now, exactly. Would that be, just to understand this a little bit better, is it both sides? You're talking about some kind of a partnership, some kind of an alliance, I assume. Is this one where Nubank needs, or it's actually the other side needs Nubank? Or you both need each other equally? No,
I think it's an opportunity to really collaborate. We look at what are the biggest profit pools in the market, or what are the most profitable companies in Brazil today? Surprisingly, it's actually Google and Facebook. That's where when you look at any consumer service, a lot of the value created in that chain is captured by the advertising networks. And so the job of acquiring customers is a very expensive job to be done. And if you get to a level where you have over 60% of the population in a country, where you have the highest net promoter score, you have one of the most valuable brands in the country, we have a lot of trust, and you have a lot of data, then you can use all of those elements to acquire customers on behalf of somebody. And what do we get in return? We are able to bring products and services to our customers, creating a virtuous flywheel, and continuously improve the value proposition that we're giving somebody within our ecosystem.
So what might this end up looking like?
I mean, we're already there. We already have that marketplace. It's still early. It's still a small percentage of our consumer base buying in there. But hopefully that means 5-6 years from now, a significant diversification away from financial services, more fee revenue, better value proposition, and us being able to work with a number of different partners across the economy.
Now that Nubank has built as big a business as it has in Brazil, is Mexico the biggest fintech opportunity for your company in Latin America?
Yeah, I think it is. So, Mexico's just past Brazil from a GDP perspective. So actually is the largest economy in Latin America. It's a higher income per capita than Brazil, about 30% higher income per capita. So it's a wealthier economy. But you see 12% credit card penetration. Brazil has 60% credit card penetration. So 88% of the Mexican country is outside. It doesn't get access to credit. You've had about 15 million Mexicans with access to a credit card for about 20 years. That number hasn't changed, which is absolutely insane. You have about 70% of the country unbanked, still putting money under the mattress and saving under the mattress. When you compare Mexico to a Brazil, an economy that has completely digitalized over the past 10 years, you see infrastructure like PIX that digitalized the economy, and you compare to Mexico, it feels like Mexico is still 50 years behind. So it is a really interesting opportunity because on one end, you have a very large market, but on the other end, you still should see 5-10 years of increasing digitalization, which will drive demand for products like ours.
I'm also curious about Argentina. As I understand things, there was a point in the past when you looked at Argentina, but decided no. Politics were obviously pretty chaotic for quite a long time in Argentina, and the economy was incredibly unstable. Has President Milei done enough to make you take another look at Argentina?
Yes. I mean, we're taking a look at Argentina. I mean, I think it's impossible to ignore what he's doing and the flip turnaround of Argentina is doing. I think it's still early to be able to make a decision yet because we'll see. You probably need to figure out what's happening over the next 12, 24 months. But I think the speed at which the situation in Argentina is changing has impressed absolutely everybody. And it is one of the largest GDP economies in Latin America. It has one of the highest human capital levels in Latin America, some of the best universities, phenomenal people, engineers, and it's an economy that also doesn't really have credit. When you look at Argentinian banks, how do they make money? They're still making money, effectively grabbing money from consumers at zero and buying government bonds. There is no credit market. There is no consumer credit. So it is, in a well-performing economy, you would imagine that entire market needs to exist at some point. And so we're definitely curious to see what's going to happen there.
He's the change agent that Argentina needed.
We really hope so, yeah. I mean, I think everybody in Latin America is rooting for him to be successful.
What about the United States? I ask this question because, as you know all too well, there are still millions of unbanked and underbanked people in the United States. And financial services on a relative basis, certainly relative to what it costs to bank with Nubank, are expensive. And there is no fintech doing in the US everything you're doing here, and certainly nowhere close to Nubank's scale. Would you ever expand into America?
Well, I should have said something differently before. The largest GDP Latin country in the world is the US. It's actually not really Mexico. You have the GDP of the 60 million Hispanics is bigger than Mexico and Brazil. So, and it's an underserved population. So from outside, from a distance, it could be an interesting opportunity. Now, you know this better than I do, the amount of regulation that exists in financial services in the US. It's amazing to have seen Brazil leapfrog completely the US over the past 10 years in terms of digital. You're probably still using cash and checks. This thing, a paper where you write, you're probably using that in the US. You don't see that.
Unfortunately, I've been able to get away from the checkbook.
Okay, good for you. Well, you don't see that in a country like Brazil anymore. So maybe there is an opportunity. I mean, it's half of the world's financial services. But it is daunting to see from the distance the amount of regulation. And when you look at the situation that no fintech in the US has really been able to capture a lot of the market, you could think about that from two perspectives. One, maybe you think it's actually impossible. There is so much regulatory capture by the big banks that there is no shot that fintechs can come in. Maybe the other side of the argument is nobody really has figured out what the right strategy is. So we toy around with the question, but it's something that we are not really ready yet to do.
I'm going to turn the point that you made about regulation on its ear and ask you about regulation here. Not every fintech in Brazil is running a sustainable business. Some of those fintechs are going to misjudge or misprice credit risk and blow up as a result. And some might be doing inappropriate things with client data. Could bad behavior by your peers trigger a regulatory crackdown in Brazil?
I mean, there's been bad behavior, but much less than you would have expected for an industry that has developed so much over the past 10 years, right? I mean, I think in 2019 there were something like 45 digital banks in Brazil, and there's been a huge amount of competition, and there's been very few cases. So I would say net, the trend towards more competition that the central bank in Brazil has done has really paid off for society, has been an incredibly successful bet by the regulators. Now, in terms of regulatory crackdown, I don't think there is, because it's already very regulated. We are incredibly regulated. I think this is something that people sometimes don't realize, or we hear things like, well, you benefited from regulatory arbitrage, or it took us 4 years to get a banking license in Brazil. It's one of the only countries in the world where the constitution of the country says foreigners cannot invest in banks. Because we had foreigners investors, we had to go to the president of Brazil to get a presidential decree exception to get a license. The paper was on the desk of the president, Temer, for 6 months, and everything we had to figure out is like who was going to put it in front of him so he could sign it. So, and then we had all the Basel regulation, we have capital controls, we have all the regulation that you can imagine. So there is not a space more to regulate more, really. We are as regulated as the biggest incumbent banks. And so while there might be actors in the system that might take advantage, there is not really space to be more regulated than we already are.
As a $70 billion company, you get a lot of scrutiny. It comes with being big and successful. Analysts have been scrutinizing your NPLs, the non-performing loans, the credits that might not be repaid. Should they be scrutinizing those things?
Yeah, absolutely. I mean, I think we are now one of the largest issuers of credit cards in the market. We're growing extremely fast on the credit side. It is the place where I would, if I were an investor of Nubank, that I would be scrutinizing with a lot of detail. The flip side of that, though, is we've built what I think is one of the most sophisticated credit infrastructure in the world. There was an opportunity we had in 2013 when we look at a market that was not differentiating really risk. We had the opportunity to go and grab some of the best talent in the world out of Capital One in the US and mix it with the best talent in Brazil. Built credit infrastructure from scratch on the cloud using a huge amount of data. And different from a lot of the US fintech peers, we've seen about 6 different crises in 10 years. The macro we've seen as a startup has been the worst nightmare macro of any entrepreneur. We've seen an 8% GDP contraction in 10 years. We saw a presidential impeachment. We saw corruption scandals. We've saw huge amount. I remember US investors asking us during post-COVID, what is going to happen with you when there is high interest rates and high inflation? And my answer was like, we see that every 2 years. It's like US fintechs don't see that. Inflation is like this phenomenon they haven't seen. For Brazilian entrepreneurs, inflation is there every day, and the ups and downs is there. So we've grown a lot, but we've battle tested a lot of our credit infrastructure in really adverse conditions. And we've been able to show investors that we know what we're doing on the credit side.
One last thing. Give us a glimpse of the future. Technology has been the great enabler for what Nubank is able to offer today. What's going to be possible thanks to technological innovation that isn't possible today?
Yeah, so a couple of things. On one end, you could think about banking development in certain phases. Our competitors today in Brazil or Mexico, they have about 100 million customers with 100,000 employees. We have 100 million customers with 6,000 employees. So there you already get a 20x improvement through technology. But when we compare ourselves to some of the DeFi crypto platforms, they have 100 million customers with 30 employees. So there is another 100x gain in terms of operational efficiency. And that also means passing that efficiency to the end customer via lower fees and lower interest rates. So there's huge amount of efficiency gain going forward in using more systems, smart contracts, crypto, AI on efficiency side. That's one side of the coin. The other one is we think smartphone started to solve one part of financial services, which was access. Smartphones put a bank in every single person's pocket. But people still don't really know how to use the bank, right? Even if you have a bank in your pocket, you don't know how to invest your money. You don't know what's the best tax-efficient fund to invest your life savings. You don't necessarily have negotiating leverage or knowledge to make different banks compete for the lowest interest rates. We think AI will put a banker and a bank in everybody's pocket, and so that will be the next phase of inclusion. That will be actually financial advice for every single person. And when you look at the access of that financial advice, is very unequally distributed today. The top 1% has access to the best products. The bottom of the pyramid has effectively no access. So we are excited to see the improvement in advice as well as the operating efficiency playing out over the next 10 years.
David, thank you so much. Ladies and gentlemen, please join me in thanking David Vélez.
Thank you. Thanks.
Thank you. Thank you.